Welcome. So, what if I told you that the single greatest book on investing was actually written over 70 years ago? Seriously, Warren Buffett himself calls it, and I quote, by far the best book on investing ever written. Today, we're going to crack open the timeless lessons from Benjamin Graham's masterpiece, The Intelligent Investor. Okay, let's dive right in because Graham starts with a question that forces you to look right in the mirror, and this one choice, it defines everything else. So, are you an investor? Or are you a speculator? For Graham, this isn't just a small difference, it's everything. See, an investor operates like a business owner. They do their homework, they protect their capital, and they aim for a solid, adequate return. A speculator? Well, they're more like a gambler. They're just betting on which way the price will wiggle and hoping they hit the jackpot. One is a profession, the other is a prayer. All right, so if you've decided, yep, I'm an investor, Graham says there are basically two main roads you can go down. The real key here is picking the one that actually fits your personality, how much time you have, and what you're really trying to achieve. So on one hand, you've got the defensive investor. You can think of this as the sleep well at night strategy. It's all about safety, keeping things simple, and spreading your bets widely. And on the other hand, there's the enterprising investor. This is your financial detective, the person who is genuinely willing to put in the hard work to dig up those undervalued gems. There's no wrong answer here. The only mistake is not knowing which one you are. And for that defensive investor, Graham had this brilliantly simple rule for staying sane and stable. Always keep a mix of stocks and high-quality bonds. And here's the rule. Never let either one fall below 25% or go above 75% of your total portfolio. This simple little band acts like an automatic shock absorber, really protecting you from the market's craziest swings. Okay. Now we are getting to the absolute core of Graham's philosophy. It all comes down to three incredibly powerful ideas. These are the mental frameworks that separate the truly intelligent investor from, well, everyone else. Pillar number one is the margin of safety. And this is the big one. Graham literally said these are the three most important words in all of investing. Just think of it as your own personal financial seatbelt. It's the buffer you build in against bad luck, against your own mistakes, and just the general chaos of the world. And the concept, it's just beautifully simple. You do the hard work to figure out what a company is actually worth. Let's say it's $100 a share. Then you simply wait. You only buy when the market, in its infinite weirdness, offers it to you at a huge discount. That gap, that's your protection. That's your margin of safety. Now, this next idea, this is where Graham's genius for human psychology just shines. To help us get a handle on our own crazy emotions, he invents a character for us, your imaginary business partner, the incredibly moody Mr. Market. Some days, Mr. Market is just on top of the world. He's euphoric, and he'll offer to buy your shares from you at ridiculously high prices. But on other days, he's in a deep, dark depression, and he'll offer to sell you his shares for practically nothing. His wild mood swings are what create all the opportunity, but only if you don't get swept up in his drama. And here is the absolute key. You are in charge, not him. You can listen to his price quotes every day, sure, but you have to completely ignore his mood. Mr. Market is there to serve you, not to guide you. Your job is simply to take advantage of his pessimism by buying his bargains and maybe profit from his optimism by selling to him when he's feeling giddy. Which, of course, brings us to the final pillar, intrinsic value. Because how do you ignore a manic-depressive business partner? You need an anchor. You need your own independent calculation of what a business is actually worth. And this has absolutely nothing to do with a stock price flickering on a screen. It's all about the real-world value of its assets, its earnings, and its future. And this really gets to the fundamental difference. The market is constantly screaming the price of everything every single second of the day, but it never tells you the value of anything. The intelligent investor never, ever forgets that these are two totally different things, and all the profit, all the safety is found in that gap between the two. So you can understand all of these concepts. You can have the best spreadsheets, the best tools, but Graham gives us a pretty stark warning here. The biggest obstacle you are ever going to face isn't Mr. Market. It's the person staring back at you in the mirror. Yeah, it turns out we are all wired for these classic psychological traps, right? Chasing the hot new thing like lemmings off a cliff, panic selling with the crowd, and just generally thinking we're way smarter than we actually are. Graham's final lesson is that your success as an investor will depend way less on making a few brilliant moves and way more on just consistently avoiding catastrophic mistakes. You know, Graham's most famous student, Warren Buffett, really just captured this entire emotional battle in one perfect sentence. Your feelings about the market should be the exact opposite of what the crowd is feeling. That is the soul of being a contrarian, and it's the absolute heart of intelligent investing. So, when you put this all together, what does it really mean to have the mindset of an intelligent investor? What is the secret code? It really just boils down to this. Investing isn't about being a genius. It's about having discipline. It's knowing deep in your bones that price and value are not the same thing. It's demanding that margin of safety, and it's making the market work for you. At the end of the day, it's a game that's won by not losing. And that simple shift in mindset, that changes everything. And that right there, that's the ultimate question Graham leaves us with. Because these ideas, they're pretty simple to understand, but they are incredibly difficult to actually do in the real world, with your real money on the line. Knowing the path is one thing, having the discipline to walk it, that's another thing entirely.